How's it going, everyone? In today's episode, I'm going to be telling you some of the ways that I'm investing right now during the pandemic and all the turmoil in the markets. Let's get started. Welcome back, everyone. So today's episode will be a quick one, but I do want to discuss some of the techniques and strategies that I'm deploying right now in the markets, and also what I'm coaching my clients on as to how to navigate these crazy times in the markets, okay? So a lot of what I'm doing now is based on a few things. One, it is the uncertainty of the pandemic. We generally know that the jobless claims are coming down. Unemployment's around 8% right now, which is not the worst thing in the world. We know that the government's going to probably continue to pump stimulus in the system. Again, that's going to increase our national debt, likely put risk on the dollar as a reserve currency, and ultimately cause more chaos in the markets of the stocks and mutual funds and all that. So what do you do during these times? Okay. And I consistently, over the last probably 12 to 18 months, have been very wary about the stock market in general. Again, I'm not a home run chaser, so I was not chasing Tesla before it hit $400 a share. I was not chasing the Snowflake IPO. What I have been doing is watching fundamentals and valuations, and they today don't really make sense for a lot of the stock market. So I continue to tell my clients to really be careful as to how you're investing in the stock market. If you're going to be out there in the stock market, do consider having diversification across equities, whether it be international versus US, different asset classes, commodities, gold, metals. Be very diversified as to not risk taking a hit in any one category. I think there's just a lot of risk out there, a lot of uncertainty. And from my experience, about 15 years doing this, uncertainty equals volatility. And unless you know what you're doing, that can mean grave results in your portfolio, okay? So switching that over to real estate, I still think there's a lot of tailwinds within real estate depending on the market. Again, I think everyone who is savvy in real estate expects some sort of wave of foreclosures, and I think it's going to be targeted primarily in markets like Las Vegas, Florida, Miami, places that are catering towards hospitality and entertainment. That shouldn't be a surprise. I think the urban cities are going to take a hit, as they have been, and I continue to believe that. I think the price points above $1 million are at risk. But generally, when you look at stable markets with diverse economies, as we always talk about, in areas that are producing homes between $175,000 to $300,000, I think you're going to be just fine there, as long as the markets are not losing population, are not losing a lot of jobs. I think generally you'll have stability in those markets. So what I'm coaching my clients on is basically continue to focus on your strategy, continue to find deals that cash flow, roughly between 6 to 10% cash on cash return, right? And we have other videos that talk about what that is. And again, continue to buy products in decent neighborhoods that cater to a decent tenant class, okay? So again, I'm this week, one of my goals is to buy another rental property. So I'm very bullish still on real estate over the long term. As another side piece that I'm telling my clients is to consider, if you have cash or equity in your home, consider leveraging that equity or using the cash to put your money in private money deals. Our private money deals are still getting 14 to 18% returns annually. And so, again, there's a lot of investors out there that are buying the product that our borrowers are producing. And so we have, in fact, just this past month, we've done 14 deals, all that have had great success. Okay. So I think generally, if you're playing the markets conservatively, if you're continuing to focus on your strategy, which again, if you're using what we always talk about, diverse economies, strong fundamentals, good population growth, good median income growth, good GDP growth, and the economies are doing well and not exposed to the COVID impacts substantially, I think you'll do just fine. And again, make sure you're not keeping cash in the bank. I think there is a great risk of inflation due to all the spending that we're doing. And if the dollar does crash, it's going to crash hard. So do consider leveraging the cash in your bank. Cash is not the asset that you want to have right now. And you want to make sure that you're deploying that into income producing assets. So That's generally what I'm doing myself and what I'm telling my clients to do. I think during these moments, you have to be cautious. Make sure that your expenses are in line. You're not overspending. You're not buying anything fancy schmancy. You're kind of sticking to your conservative game plan until this all settles. So that's my take. Would love to hear what you think about my strategy or what you're doing. Please share. I always like to hear other people's strategies and how they're navigating this this interesting time that we live in. So with that said, again, be sure to subscribe. We're going to have more content coming up for all my subscribers, and we'd love to see you there. So thanks again.